We may have some tax cuts or an additional stimulus package early in the year from Congress that gets some rebate money out or gets some sort of a tax cut for the lower income folks. But eventually, tax rates are going up. The preferential rate that we have on long-term capital gains and dividends will probably go to 20 or 25%. The rate brackets at the highest level are now 35, and those will probably go to 39.6%, just like they were in pre-2001 Tax Act.
But you're not saying you think that'll happen next year?
No, I think that'll be 2010
okay.
when that happens.
Now, but what about the discussion that's going on regarding the need to stimulate small businesses? You hear small businesses mentioned a lot, but we could say businesses generally. And I think even liberal Democrats would recognize that it doesn't make sense to tax small businesses in tough economic times. Do you see any potentially favorable things for small businesses next year? Might they renew, for example, this 179?
I think that's the prime tool that they're going to use for small businesses. And the reason it only applies to small businesses is because of that cap on the dollar value of assets that you can place into service. So IBM is not going to be able to take advantage of this, or Mobil. ExxonMobil can't do it. But if you have a small business, it could even be a very large business, but if you're only placing in service up to the income limit, you can get that first year write-off for those expenses. And that's a powerful tool to stimulate business, because if I'm thinking about buying a $500,000 piece of equipment and I can't write it off, if I have to write it off over 7 years, it's a lot economic.
Or 10 years or 15.
Economically, it's a lot better for me to take the deduction currently and either pay for it over time or pay for it out of cash flow of the business.
And I want to be sure that we're not talking over the heads of some of the viewers. We talk about placing in service. All the IRS has said is, hey, one way we can assure that these very large businesses are not taking advantage of this, that we're not intending to benefit, is we'll decide that we'll create a limit of the amount of equipment, machinery, things that fall into this category that they've actually bought and started using that year. And that's whenever we say place into service, we're talking about starting to use this equipment. Well, it's a pretty tight definition. So if you think about it, it's an effective way to push out of consideration or out of the running for this advantage any business that's using a lot of equipment and machinery that they bought. So that's the reason you have this limit to define who's eligible. And the limit this year has been
800,000.
800,000. So, but yeah, I suspect that some of you have small businesses. To you, that seems like a large number. In that case, you're a perfect candidate for taking advantage not only this year, but if this continues next year as well. So we do expect some favorable tax changes, which I think that, at least if you're coming from a Republican perspective, throughout the election cycle, you were thinking that this was going to be catastrophic if Obama gets in for businesses, for higher income individuals. I mean, we were thinking that this would not be a good thing for many of our clients. But it looks like, to many people's surprise, that the Obama administration might be pretty accommodating to businesses, at least in the early years.
Well, Obama is a very smart man. And I think if the economy were different, we'd be facing a different set of tax issues in 2009.
Yeah.
And so he's smart enough to know that if he increases taxes next year, he's just exacerbating the problem. He needs the economy to recover. We found out that we've been in a recession longer than we thought, which is actually a good thing, because by the time we realized it, we had already been there a while. Mm-hmm. And so the life cycle of the recession will extend. Hopefully, the end will come quicker than we anticipate, because it started before we thought it did.
Okay. Well, what else can you say about next year?
Well, I just think that the fear that's out there now, people need to relax, maybe turn off the cable news shows, because many of those shows, they don't know what they're talking about. They're just regurgitating what they've heard, and it just creates this fear. This 24-hour news cycle that we have, in many cases, makes things worse, and people need to relax. Hopefully you have a job. If you don't have a job, this is really a tough time. But if you do have a job, it's going to be tight, but you're just going to have to hang on. And hopefully by the spring, the fundamentals will be better. People still won't feel better because jobs are going to lag. And hopefully by the end of 2009, things will pick up, and 2010 will be a good year, even though tax rates are going up in 2010, I believe.
Where should people go if they want fairly reliable, understandable information? What source would you suggest? Is there particular sources that you would suggest your clients go to get their news? Bloomberg, for example?
Bloomberg's good. I read the Wall Street Journal, the New York Times. I do like to get a few different perspectives and then form my own opinion. But I don't think watching CNN or MSNBC, some of those shows, they have some people that really know what they're talking about. But if it's just a person to be in front of the camera that looks good and can talk, they don't have any real opinion of their own. They're just regurgitating someone else's opinion.
Okay, so let's wrap up with this. We're almost at the end of the month, a little over 15 days. If someone comes to you today, a client, and says, gee, is there anything I can possibly do to help my tax situation for tax year 08? What would you suggest I do?
The best thing you can do, and what we're doing for all our clients right now, is focusing them on what their situation is so that we know where we're going. I have a client right now, he's got $300,000 worth of business income, and he knows what that tax liability will be at the end of the year and in April. But he also knows that he can do some things. He can go buy the equipment that he was going to buy next spring. He can make sure that all his bills are paid, so he gets a deduction for that because he's on the cash basis.
In other words, write all those checks for expenses.
Write all those checks, pay everything that he possibly can with the cash on hand or on a line of credit so that he can minimize his tax situation this year.
And he can mail those checks, on the last day of the year, and that qualifies, doesn't it?
Right. As long as he's sent those checks out on December 31st, he'll get a deduction for them in December.
Oh, and one other thing. I know that a lot of people are under the impression that, look, if I owe taxes for 08, then I don't have to pay them till I file my return in April of 09. And that can be a very serious mistake. Do you want to give just a quick overview of that issue?
Well, what you're talking about are the underpayment penalties for income taxes, and you can get your taxes paid in on one of several ways, one being withholding from your W-2 and the other being by making estimated tax payments. And the rules that govern how much tax you have to be paid in are kind of twofold. One, you can at certain income levels match last year's tax, or at the higher income levels match 110% of last year's tax. Or in a year where income is down from the previous year, you'd want to annualize and you have to get to 90% then. And so in any event, by the time you get to April, even if you're going to extend, you have to have your tax paid in at that point. But that's why you should go see a tax professional now, know where you're going so you can make an educated decision about what you need to pay by January 15th or have withheld by December 31st. And what can you pay, how much can you pay in April without paying an underpayment penalty?
So I want those of you watching this to make a note of this point. I know it's a common area. A lot of our clients make this mistake, and that's that they believe that they have till mid-April to pay the taxes for this year, for 08. And that's not the way it works. So as John Scott just explained, for you it may be 110% of last year's earnings that you have to pay in to be safe. For some of you it would be 100%, for some 90%. But that is something that, in terms of productive things you can do with your time here at the end of the year, I would say it's critical to go in. The amount of income that you're going to earn in this climate particularly is definitely not going to offset the penalties and other costs associated with failing to meet that deadline for payment. It's safe to say it's not a smart investment to take the IRS's money and invest it thinking that you'll earn more than the IRS is going to penalize you. Wouldn't you say it's generally not a good strategy?
I would agree with that.
Okay. Well, with that brilliant insight on my part, we'll wrap up today. John Scott, we appreciate your being with us. Again, John Scott is with Anders, Minkler and Diehl. They're based here in St. Louis. They have clients nationally. He's indicated he can take at least a few emails that you might follow up on in terms of questions that you might have based on this discussion. Please keep it brief. He is very busy, but at the same time he wants to be helpful, and he's certainly been helpful in terms of volunteering to be here today at a busy time of the year for you, I know.
This is our busy season, but that's what we do.
Okay. With that, we conclude. We look forward to having you with us again. This is another episode of Cash Counsel. Take care.